morning, everybody. Welcome to a brand new trading day, Thursday, March 30th, of course. We're winding down, we're towards the end of the week, but as I'm speaking to you right now, behind this screen on the ES, we are probably seeing some movement because the final GDP quarter over quarter was just released, as were the unemployment claims. So, let's give this screen, firstly, a little bit of a refresh and see what these numbers ultimately are. What's on tap? So GDP comes in off 0.1 of a percentage point from the forecast and the previous. The unemployment claims come in slightly higher than the forecast, which is interesting because usually it's been the opposite here. It's been underneath the forecast. So maybe a sign that, hey, unemployment is about to tick higher. We will ultimately see in the next round of data, but so far this is not the most promising read that we've ever seen here in the markets. The trend recently has been to be underneath the expectation. If we take a look here, you can see all of these orange dashes represent the expectation. One miss here, but aside from that, we're pretty much usually underneath the expectation. So is this about to shoot higher here and take off? I don't know that it's just dramatically going to do something like that, but we'll gauge this very closely as we move forward into trying to figure out more of the recessionary theme, if that's the case, moving into the future here. So unemployment claims not all that far removed from the expectation. I would say it's not a massive miss, right? We didn't do something like this over here. This strikes me as something that would obviously upset the market right here, right? Look at how high we were versus the expectations down below. So anyhow, that's kind of what's on the radar there. Final GDP, if we just want to look at the graph and see what's going on. So, kind of right in line with what's typical around this area. Maybe slightly underneath, but not all that bad. Not all that bad. All right, that's that. We know at the close today, Yellen will be speaking. So perhaps, perhaps just keep your wits about you if you're an end-of-day trader, which I would not personally recommend anyhow. I'm almost never active at 3:45 in the afternoon in the market. And tomorrow, of course, we will be live at 8:15 to catch the PCE reaction. We'll be live, kicking off the stream at 8:15, a couple minutes earlier than normal. That way we can see how the market reacts to those numbers. The forecast is for a 0.4, and if we miss 0.4, then, J-Pow better step on the gas and keep the 25 basis point rate hikes rolling. With that said, let's take a look at some stock-specific headlines here this morning. What's going on? All the futures are green across the board, which should not come as a surprise if you've been looking at the ES in the background, if you've seen the NASDAQ in the background. Everything's up, and everything is up substantially. What do we see here from a headlines front? The big headline is stock futures rise as Wall Street bets that the banking crisis has stabilized, and that it's sort of an isolated issue. And so far, it does seem to be somewhat true. We'll continue to monitor things, but as of right now, right, we're not seeing continued panic in the banking sector. Continuing along, Tesla has only installed 3,000 solar roof systems in the U.S., far below the forecast. That's what some study finds. So saying, hey, you guys talk a big game, but you're not actually doing what you're supposed to be doing, or you're not doing it to the extent you say you're doing. So anyways, kind of a hit piece, I would think, on Tesla. What else? Another train derailment. What's up with all of these train derailments? Maybe they're more common than we think, and they're just starting to make the headlines here. Obviously, one with ethanol kind of exploding, if you will, is definitely a cause for concern. But it seems like lots of train derailments recently. Not sure what's up with the railroad industry. What else is going on? Walmart is catching an upgrade, apparently, if the thumbnail image is going to be correct, from Evercore. Right, boom, there you go. JetBlue is preparing to trim New York flights in response to staffing shortage. Okay, not great if you're a frequent flyer. What else is going on here? Stock-specific stuff. Well, this is obviously not stock-specific, but 2 Army Black Hawk helicopters crash in Kentucky. Ooh, not pretty. Aerial crashes never ends well. Obviously, that goes without saying. But anyhow. Continuing along, stock-specific stuff. AI continues to be booming, obviously. There are your names, OpenAI, Google, ChatGPT+, Microsoft fits into that picture, NVIDIA fits into that picture, right? What else is going on here? Stock-specific stuff. Morgan Stanley downgrades Charles Schwab, cites the extended earnings recovery timeline. So banks hit piece on another bank. I always find that interesting. What else is going on? Stock-specific stuff, more AI stuff. You can see Elon Musk and tech leaders urge a pause on dangerous race to make AI as advanced as humans. There was I believe it was a petition signed by over 1,000 like industry experts in AI that were like, "Hey, do not produce GPT-5. They're past 3. They're on GPT-4. Everybody knows GPT-4, but they're like, hey, do not produce GPT-5. Like, don't do it." There's a petition with 1,000 people behind it saying not a good idea. So we'll see. We'll see how that continues to unfold. It's obviously not the most bullish implication for what's going on with Microsoft, Nvidia, as they're kind of the beneficiaries of those programs. But anyhow, you can see as I was doing that, we got the red headline at the top. Breaking: jobless claims edge up to 198,000, higher than the expectation. This is not 198,000 higher than the expectation. It is, 2,000 higher than the expectation. So that's kind of a misleading headline there. Very misleading, right? If we go back over to the expectations, recall the forecast was 196,000. It's only 2,000. I say quote unquote only, but it's only 2,000 above the expectation. So a very misleading headline if someone interprets that as, without the comma there. If you misstep the comma, not pretty. All right, anyway. What else is going on here? Stock-specific stuff. Google reshuffles the virtual assistant unit focus with the Bard AI technology, trying to fit into the race there. And what else is going on here? Satellite imagery venture Planet reports record quarterly revenue to cap a strong year. And what else? Dumb phones on the rise. I haven't heard of this yet, but whatever floats your boat. Starbucks shareholders approve review of labor union practices. Rocket Mortgage launches a credit card. And JP Morgan finally at the bottom with a very stock-specific headline, upgrades this tobacco maker that's pushing towards healthier nicotine alternatives. I don't know who that is, but I have to imagine that it's owned by one of the larger tobacco companies. Is that MO maybe? Altria? I don't know. Anyhow, let's get off of headlines here. Nothing crazy. I would say that there's some concern around the AI push. There's some upgrade to consumer staples, right? Walmart caught an upgrade here, and that's really it. The banking crisis seemingly stabilized, and we'll move along. What's going on with the earnings calendar? Yesterday was really Restoration Hardware after the close. Nothing else is really important during this week. Maybe some popcorn to watch things for Canoo on today after the close, but that's really it. That's really it. Nothing crazy going on here. Let's move on over to the ES 4-hour time frame chart. Say good morning to some folks in the chat and dive into our price action analysis here and the competition of the two trends. We did just produce technically on the 4-hour time frame chart a new higher high from here to here. This FOMC spike was the last major swing high. So the fact that this is reversing does strike me as noteworthy. We'll dive into that in just a second. But good morning. Who is here in the chat? It's Philip Morris. Karen Garcia, thanks for the insight on that. That was the upgrade to the tobacco company. Kicking us off is Michael Cobble. We've got Cy. Katie Baby is in the chat. Chris C. Good morning. Roger Tutt, Ryan Speed, Pete and Repeat, Sammy Sams, Kata Leon. We, of course, have INF the Based Homie. We've got Jeep for Life. Nice to see you. I feel like I haven't seen that name in a little while now, but if you have been here, appreciate you being here. Sometimes the top chat algorithm, excludes, includes, who knows, whatever. But nice to see you, Jeep for Life. Appreciate you coming out to the show. We've got Brett G, Leroy, Andy, Mike Patel, Mickey, Savvy, May, Matt Ronson. We've got Sharath, Ivan Lobos. We've got Mora Maker, The Real Toto Fan, Justin M. Storm, DP, Paul Boder, good morning. We've got Ryan Friedman, John Doe, Ron K, Chronically, Deborah, Mahogany Beats Official. What's up, my man? We've got Capitalist Dog. We've got Blackface Damaged Core, John Cardozo, Nick Farrell, The Original Rude Boy, Joel, Life Between Raindrops. That's a cool name. Quest of all quests, we're going to look for some green names only now going forward. Ketchup Kings gets an honorable shout out, as does Buckminster Wallace. But then we're going with Chris Carras, David Ball, Siege, Ty, Bob C, Davey Day Trader, Rebecca F, Bluefish Aquariums, Stevie J. We've got Thule, Black Diamond Off the Grid, Crypto Commando, Starlight, Victor Y, The Sandman, Doug K, J Hicks, Miami Beach Brokers in the building, and Did we get everybody there? Inza, Jay with the gold cash bag, Maria, Infornity, Starlight, M. Spears, Chowman, and Raz. Okay. Green names have been taken care of. Good morning to everybody. Shout out to everybody, but green names, channel supporters, absolutely. With that said, ES 4-hour time frame chart, as discussed in last night's episode of the midweek market update, we were very, very mindful of this higher high being produced because this immediately starts to neutralize the 4-hour trend. You could still make the argument we're going lower high from here to here, but this pivot was supposed to, quote unquote, supposed to be the lower high with this sharp rejection, with the FOMC momentum and a little bit of follow through, making a lower low underneath that day's low. This was the last lower high. Now that we're trading above that in the pre-market, doesn't guarantee that we have to hold above it. Doesn't mean that the 4-hour trend has completely reversed, but you can clearly see that, hey, things are at best neutral here. The downtrend is no longer as firmly in play. And we've been talking about this in the past couple of streams, right? We've been saying, sure, technically speaking, we're still in a 4-hour downtrend, but as this has been unfolding, it's significantly weaker. It is significantly weakened on the 4-hour. And if we go on down to an hourly time frame chart, we've been saying that this hourly up channel, something that would look like this, taking out a trend line, boom, and boom to form a channel, is very much so in play. It's been in play since kind of back in here, and it's continued to keep the market moving in the upward direction. So it's very difficult to be a bear in this market environment unless you're trying to short off of the resistance trend line and see a rotation to the bottom edge and then find support and do something like this. So that's totally a reasonable thesis for the market here, is to reject off the upper edge of the trend line, but you have to at least acknowledge as well that, hey, the hourly chart is definitely in an uptrend. The 4-hour chart is now flipping into neutral / trying to get into bullish territory. And, all things considered, I think bears are really, we've talked about this, I think the bears are really struggling. Given the macro narrative that banks are exploding, inflation's still out of control, recession is around the corner, everything's going to go to hell in a handbasket, which it very well could. The market and the price action in front of us has not yet aligned to that thesis. This all boils back down to aligning your time frame thesis with the execution of trade, right? If you're a day trader, you better not care about recession themes. You better not care about, banking crisis, macro narrative, rate risk, all of that stuff, bank runs, that should be the last thing on your mind. If you're a day trader, you're caring about levels. You're caring about the technical picture of what's taking place here and who is exhibiting strength versus weakness. It would be a different story. If we were in a hourly downtrend, we would say, hey, we're in an hourly downtrend, and that pairs nicely with the macro narrative that everything is exploding, and we will look for shorts. But the price action is blatantly disagreeing with that narrative. So, knowing all of these things, what can we say about today's session? Well, we're opening on yet again another gap higher. I want to show you where the rejection points are coming from overhead before we dive into the 15-minute chart and talk about the gap rules framework again. So the big upside resistance is really up here around 41.25. 41.25 does strike me as the next major important inflection point. And from the 4-hour chart, you'll just recall that this was the lower high pivot and then this was the lower high pivot. So that's back on the table. And you can easily see how if we go there, there's a strong opportunity that on the 4-hour time frame chart, neutralizing this high easily can produce a higher low, and now we're in a 4-hour uptrend. So all things considered, getting to this overhead range is very, very important from the higher time frame perspective to change the 4-hour trend. Now, I'm not arguing that we just blast off to here on today's session. I'm just saying that that is the next most structural important area that we should be paying attention to. There is a little bit of interaction right here at the previous highs of this day, lows of this day, and then highs before the breakdown came in here. And that level, it's going to be a minor-ish type level, and it's roughly around 40.95. 40.95 would be the zone I use. You could also look at 4100, the nice round number. That would be reasonable as well on the upside as resistance, right? It's a minor level before 41.25, about 25 points higher, of course, up here. Okay, so that's the structure on the hourly time frame chart. Obviously pulling back, it's all about the gap filling and looking for the prior high of day, which is in alignment with your resistance from here, here, and the top of the prior range from this area. So no surprises with downside levels, but that's where the upside level is coming from next. Let's have a look at the 15-minute chart now and see what's going on from a structural perspective. Ask the 3 questions. The stage is set once again for some early morning trade to develop. We do not have to be as patient. Something should happen sooner rather than later here in the market today, given what's taking place. So what is taking place? Well, the 3 questions will always guide us. Number 1, where are we opening in relationship to the prior day's range? Well, here's the high. Here is the low. We are currently opening well outside of the prior day's range on a massive gap up. And once again, what do we say? Gaps that are usually larger than about 20 points in the ES, you should start to manage your expectations on the outcomes for a complete gap fill, right? Usually you're looking for a partial gap fill, or just expecting that if we do go sideways up here and we do chop around, okay, sizable gap, it's not totally unreasonable for the market to do so. As of right now, let's just round down and say that 40.60 was the prior high of day. We're currently trading around 85. And again, not to insult anyone's intelligence, 25-point gap up. It's definitely sizable at this point. So gap rules will likely be in play. Not likely, they absolutely will be in play on the open. Question number 2, where are we opening from the perspective of the overnight range? Here's the overnight low, here's the overnight high. We're opening smack on the overnight high as of right now, which is technically bullish, but it, as we know, sets up decent risk reward for the fade, the opposite type of move on the opening bell, because we can place a stop loss somewhere up here. We'll get to the gap rules in just a second. We've been talking about them a lot here on the channel. You should kind of know where I'm headed with this at this point in time. Question number 3 to round out the 3 questions, and we'll dive into the framework. What do we see from an overnight inventory perspective? Where are we in relationship to the prior day's close? Same thing as saying settlement. You'll hear both of those terms used interchangeably. How much time was spent below? How much time was spent above? And what you'll notice here is that some time was spent below, but obviously this is pushing the market into net long territory, especially as we typically say, getting closer to the bell draws in more volume than what typically happens in the wee hours of the night after the maintenance period is over. So all things considered, I would argue that we're probably something like, no, who knows, maybe 90% net long, 90% net long, given the fact that the volume has increased. I shouldn't say tapered, that would be the opposite. Volume has increased as we get closer to the open here. Now, question number 3 always informs us that when there is a major imbalance in the inventory, gap rules are particularly notable, especially when we're opening close enough to the overnight high to make the risk reward worth it for a downside fade. So, knowing that the 3 questions align nicely with the gap rules framework, let's dive into that framework right now and talk about what we've been talking about for the past couple of days. Well, on today's session, if we open here, we know that, as we typically do, we will look for a failure of the overnight high, and we will look for a short back down through the opening print to close some of the gap. We will probably target a 50% gap fill, just like we did yesterday, and look for a reversal here at the 50% gap fill, noting that would be an indication that we have weak sellers. Then we'll look for a retarget back at the opening print. And if we move through the opening print, that's where we look for follow through on the upswing, quote unquote, squeezing the juice out of the shorts who thought that this market was going to hell in a handbasket because of the bearish narrative. So that is, primary situation number 1, almost identical to yesterday for me on today's session. Recall that this was a partial gap fill. We sort of held back above the opening range low, and then it was a little squeeze into the close here. So I would prefer to see something similar with a 50% gap close, not making the rotation all the way here, and then we keep on going. One thing that is noteworthy, right? Folks say, hey, a gap is technically bad structure underneath us, and you're absolutely correct about that. But it doesn't mean that it's going to prevent the market from rallying in the upward direction. Why? Because often, rallies can start this way because you get the fear of missing out folks who want to jump in, and that new money buying pressure just prevents these gaps from even coming close to being filled, right? So rallies can start this way. Although it is technically on shaky structure underneath us with an open gap, it's not the end of the world, and it's not something that is totally going to prevent the market from continuing in the upward direction. So situation number 1 today is a partial gap fill, almost an identical situation to yesterday that looks like this. Situation number 2 is, of course, the full gap close. So meaning that we get a fake move over the overnight high, move through the opening print, but this time we close the gap all the way and reverse off of the prior high of day. That, of course, is very tradable as well because we are still looking for a couple of things to take place. Number one, if you're aiming for the full gap close, then just be mindful that your risk reward is much better than the half gap. There's the half gap looking at about a 2-to-1 if we can open right here where we're currently trading. But if we go for the full gap, you can instantly see that we've just about doubled our reward. So, maybe that's a 4-to-1, 5-to-1 type trade if it unfolds perfectly in that manner. So really, really worth watching for the fade to unfold in the first place as the setup early in the day as opposed to later. Okay, so that's situation number one and situation number two. As we wanted to clarify in yesterday's stream, we want to do the same exact thing today. Two things need to take place before we're even thinking about shorting a market with relative strength in the pre, right? And what is that? Well, number one, as we described yesterday, we need to be failing the overnight high. We need to be underneath this level. The level currently is 40.8575. 40.8575. We cannot be trading above that level if we're trying to fade the market in the downward direction. And number two, we should be underneath the opening print for a stronger fade to start to develop. Why is that? Because screens go red from being green if we're above the open, on the open. And of course, that's more of an incentive to sell positions, enter new shorts, right? You're more confident in downside, of course, when you see that the market is red on the day and we're under the opening print. So those are the two stipulations that always need to be true if we are trying to fade a gap in the downward direction. The same is true but opposite on a gap down, trying to fade in the upward direction. But you get the idea. This, of course, is much more relevant to this open. So situation 1 and 2, we've covered it. We've talked about the gap rules here. We've talked about the framework, and that is, ideally what we get on the open. Doesn't mean that it's going to unfold this way, but it is what we should be looking out for from a structural perspective. Now, once again, just as a brief recap from a psychology point of view, why does this work? Because as we've been getting closer to the opening bell, more and more folks, aka more and more volume, has been traded, and therefore we can make the assumption that these traders are getting longer and longer with terrible trade location really at the top of the move here. And they're expecting follow through on the open. If they do not get that follow through, aka we fail the overnight high, hint, that's why we use stipulation number 1, then we are looking for those weak-handed traders because they're overnight traders to close out of their positions, add selling pressure, and when we move under the opening print, that should sort of be a signal to come in and start to close the gap. Once again, watching for a 50% gap close, roughly around 40.75. 40.75 would be about a half gap here, or the full gap close into the prior high of day, which is at 40.6125. 40.6125, okay? That's the psychology behind why it works. And then a reversal off of these levels. Number one here, the FOMO crowd steps in and wants the market to go higher because they're like, oh goodness, quarter's ending, we need to window dress, whatever. You could think of it that way, that's fine. Or you could just say, hey, structurally speaking, we're in a series of higher highs, we're in a series of higher lows. It's an uptrend. Why wouldn't longs want to get involved here? Barring the macro narrative, again, that has nothing to do with what's going on with price right now. It's reasonable that they could step in at the half gap. It's also, ironically enough, structure from the pre-market session. If these longs want to defend their position in the regular trading hour session, there's potentially an area of support here around 40.75. If we get the full gap close, we are still looking for a reversal. Why is that? Because it would be number one, repairing the full structure, and of course finding a higher low above the prior high of day or at the prior high of day. Obviously keeps the bar to bar count in a strong uptrend, noting that we've just produced a higher high on the open, essentially on the bar to bar count. This will undoubtedly be a higher high. If we find a higher low here, it makes structural sense, right? So that's all the reasoning behind why we look for this setup in the first place. Let's take a look at the internals as a full picture here, and also point out the same thing we discussed yesterday. These will very likely open strong. They will open strong. I don't know. Yesterday wasn't as strong as I would have thought, but it did improve on the open. That was the key. Yesterday they opened around 5-to-1, and then they improved steadily throughout the day towards 6-to-1s, and even at times getting up towards 7-to-1s. That, of course, is not indicative of a fade whatsoever. But what you want to see if the market is going to close the gap all the way is, let's say that they open, we always just use this for round number's sake, they open 10-to-1. You want to see them work back down towards a 6-to-1. And then you want to see them work back down towards a 3-to-1. And it's very unlikely that on a gap of this magnitude, you'll see negative impressions on the breadth here. But basically the idea is that you want to be trending away from stronger reads instead of moving into stronger reads if you're trying to short this market for the gap close. So that's indication number one. Usually this moves quite slow. The next fastest indication will be the advanced decline line. It's very likely that we once again open up here somewhere in trend zone. What you want to see is a downtrend develop that breaks underneath the bottom of trend zone, aka 1500. Notice on yesterday's session we tried to, then came back in, right? There really wasn't much gap fade yesterday because these internals just did not get bearish enough out of the open to indicate any pressure in the downward direction. So if the fade is going to be stronger, this should break underneath 1500 and start to move towards the zero line in the advanced decline line. Then last but not least, the ticks will likely open well above 1000 as they did yesterday. But what we want to see is a stronger move and hold underneath the zero line here for some time if the gap is going to fade all the way. If you were watching on the morning session yesterday, if you were watching, early in the first 15, 20, 30 minutes of the day, the first two 15-minute bars here, then what you'll recall is that the tick actually stalled out above 1000. Like this first 15-minute bar, sure, it's a solid red-bodied bar, but if you were actually watching the first 15 minutes as it was wiggling around there, you would have remembered that the tick did not want to spend any time underneath 1000. This kept on turning into a lower wick, and the tick was remaining above 1000. That is not a strong indication that a fade is on your hands by any stretch of the imagination. What you typically want to see is a first 15-minute bar that comes in strong underneath 1000, spends time here, and is followed up by a move into the zero line, if not through the zero line, for stronger indications of a fade to the prior high of day. If we're just doing what we did like yesterday, hanging out above 1000 in the first 15, the next 15 is still well above zero, something like this, then it's very unlikely that the full gap close is going to be on the table. So that's the market internals in a nutshell and how they tie in nicely with our gap rules here. We, of course, also know, just like yesterday, because it was a partial gap fill, as we've been saying in this sort of trading 401 lesson from a gap perspective, when the value area cannot get overlapping to down of the prior day's session, what do we know? We typically look for late day rallies to be higher in probabilities. And that's exactly what took place here. So we'll echo the same sentiment. If the value area on today's developing session cannot get overlapping to down inside of the prior day's range here underneath the prior high of day, I would expect that the odds of a late day rally are increased as shorts continue to get squeezed out of this market and no progress in the downward direction is being made. So those are sort of all of the things to keep in mind as we're trading on a gap, and that's basically what I've got for you in the ES. Just to recap, my primary outcomes that I'm watching for, something that does this, partial gap fill, almost identical to the prior day session. Why? Because we have this structure in the overnight session, 40.75 is the number, half gap and then a reversal, target the opening print, and then the high of day. If we go to close the gap all the way, fine. We'll just be mindful. Of course, you need a setup here. You cannot just blindly long 40.75. Please don't just blindly long that. You need a setup still. We're just looking at it as a structurally important area. Could be an intraday 5, 15, 30-minute hammer, whatever time frame suits your trading style best, something like that. Or it could be a simple double bottom intraday, inverted head and shoulders. Whatever the pattern is, you need something here to indicate a reversal at 40.75. Or if that does not take place, then so be it. We hold on to gap fill shorts. We do not panic out of them if we're not seeing reversal patterns. We don't, we just keep trailing our stop lower as we responsibly do in any trade. And then we watch to see if we can make it all the way to the prior high of day. If the internals are going to help out, I was trying to draw an I here. Let's go I for internals. If the internals are telling us that, hey, this gap is not really showing us that it wants to fade all that much, then, hey, maybe there are higher odds of the 50% reversal, right? But if the internals go blood red on the open and all of a sudden everything is looking terrible, then of course you're going to want to try to hold out for that full gap fill area at the prior high of day, 40.61. All right. So that's that. That's what we have on the downside and the potential reversal off the prior high of day. Once again, those are my two primary situations. Just getting straight continuation in the upward direction is going to be very difficult to trade. You do not want to be chasing this move now that we're making a new 4-hour higher high. Because we have a 4-hour higher high, we are susceptible to being caught in a pullback and still remaining in a healthy and strong uptrend. So chasing the higher high here, not really ideal. Not really ideal. It makes it very difficult if we just see straight up continuation without a partial or full gap fill first. And then, of course, obviously, if we do not hold up for a gap fill reversal here and we poke into the prior day's range, then we'll take that with a grain of salt and say, okay, bears are making some progress, or we should just say that the buyers are getting tired after producing a higher high up here. It's reasonable that we need some consolidation, some digestion of this move overall. And then, of course, as we talked about in last night's episode, let's go back to the hourly chart. Last night's episode of the midweek market update did not come out as a midnight special. It was released at a normal hour. So hopefully you caught it. But the idea is on a deeper pullback. So if this morning's gap does not hold, we fall into the prior day's range. Technically, there's enough room to come all the way back down and close the gap and produce an hourly higher low. We have lows, higher lows, higher lows, higher lows. You get the idea, right? Even if we close yesterday's gap, we are still offering up an hourly higher low, and I would not be overly concerned about that. We now, of course, we would need to put in a gap fill reversal off of this area. We would need to stay above that nice round number, roughly 4,000. But what I'm getting at is, okay, there's the possibility for some short trades to unfold here. We can trade in the downward direction through this morning's gap up. If we move into the prior day's range, we of course want to be mindful of the gap that also exists underneath us, and we can trade short through that. But when and if we get down here around 4010, 4000, that general area, I would very promptly change my tone, noting that we would be at the support trend line, and we've repaired the structure, right? In an overall uptrend, you of course want to be a buyer at the higher low. So I'd be looking out for reversals. So that's higher time frame context to keep in mind. But once again, on the smaller time frames like the 15-minute chart, obviously, some fade here, some downward shorts are on the table as we look for that framework to ultimately play out. Okay, that is what we have on tap for today's session. That's what I've got for you in the ES. We've talked about where the zones, where the levels are coming from, and we'll see what the chat thinks. What does the chat think on today's session? If you're a market bull thinking that we sort of give ourselves situation number one that I just outlined, partial gap close 50% off of 40.75, and then a rally back to the opening print to the high of day and potentially through it for more upside continuation. Let's see a number one in the chat. You are a market bull. If you're a little bit more skeptical of this market, saying, things don't add up here. We've got two gap and goes. The bearish narrative is just overwhelming. I don't buy it, right? I don't buy it. Then fine, maybe we see a full gap close, but you're willing to give price action the benefit of the doubt. Maybe we find support here and we get a situation number two on today's session. Note though, that in a situation number two, value area is not overlapping to down. We should expect late day rallies technically on a situation number two. So keep that in your back pocket. That's more neutral. And of course, bears want it to go to hell in a handbasket, lower high off the gap close, fall into the prior day's range. And I would say that bears, of course, you want to get it into the lower value area from the prior day's session. Bears are aiming for this down here. That would be a situation number three on today's session. All right, that is for the bears. If you don't know, that is A-okay. Drop us a number 4 in the chat. But I would say we've been pretty on point with walking through the gap framework in these morning sessions. And I would say that we've been very, we've talked about why they work, the extra added context on the full screen of the internals. We've talked about add-ons like the value area overlapping and whatnot. I would say that folks should be moving away from number 4s as we've gone through a couple of these recent streams and really dove into why price action should work the way we're expecting it to work. And you should have some sort of edge based on, how the situation is unfolding. Like to me, I would be in the camp of number 1 and number 2 every single time we have a gap up of this magnitude. I would personally never really fall into a number 3 category unless we're in a glaring daily downtrend and we're bumping up against an area that could easily produce a big daily lower high. We just don't have that on the ES. We're in an hourly uptrend. The 4-hour trend has just neutralized. We're not really threatening a zone yet where we could see a big rejection, right? So I would be in number 1 and 2 today. That's my take on the market, okay? So while we let that simmer, we will take a YouTube poll, or we will activate a YouTube poll, I should say, and see what's going on from the lurker's perspective. So what do you think? Question marks here. Number 1 is bullish. Number 2 is neutral. 3 is going to be for our bears, and 4 is going to be for the ostrich. Folks, good. All right. Clickable YouTube poll is out there in the world. You can participate that way if you are a lurker, and we'll just scroll up briefly and see who's in the building. Did we miss anybody? Is now a good time to see what's going on in the chat. All right, so Good morning, good morning, good morning. A couple other folks trickling in here. Nice to see you. Any questions, comments, concerns here before we dive into the poll results? The number at 50%, Mauricio, as we just discussed, 4075 would be the structural element I pay attention to there. It's roughly around the 50% gap fill area. What else is going on? Any other questions, comments, concerns? Yeah, the gap always, gap close, access support. You're absolutely right. Black Diamond off the grid. Hit the like button. Appreciate that. As always, Mickey. Mountain J, you can, on YouTube, you can check out the tutorial on how to set up the Thinkorswim here. I just walked through the gap rules. Ivan, hopefully you should know everything about them now. Arian, I did directly learn from Peter at Shadow Trader. He is, whether he knows it or not, he is my biggest mentor. And, I don't really take, I've established some of my own rules with how to trade the gap, but for the most part, I don't really take credit for this as being an individualized system. This is what, almost all responsible traders who have been in the game would tell you something extremely similar to what I've just told you about the opening framework to use. So yes, I did learn from Peter at Shadow Trader. He is my largest mentor. Again, whether or not he knows it is a different story, but that is that. With that, we're into some poll results. Lots of ones flowing into the chat early on. Lots of ones. Couple twos here. Some threes as I get deeper down through the list today. Couple of threes trickling in. And yeah, some three. It's not an overwhelming amount of threes, but it's definitely more so than what we had on yesterday's session. So that's that. So for the folks who are requesting analysis, number one, please stop typing in all caps for Manny Gonza. It's just, it sounds like you're yelling in the chat basically. But if you want me to analyze the gold contract, you can get a green name and you can ask that way. Same thing for read this. If you want me to review EA, you can get a green name and you can ask that way. Or if you want my thoughts on gold, you can just go back and watch last night's episode of the Midweek Market Update. We cover gold in that every single Wednesday and Sunday. All right. Mohammed, I don't know what you guys mean by this question. You ask, could I cover structure in some of the pre-market prep videos? We just talked about structure. I don't know what you mean by that. I really don't know what you mean by that. And Manny Gonza, if you type in all chats again, okay, thank you. I see your message for thank you. So, okay, good. All right. We're going to move along. We've covered the ES. We know about the framework. Let's just be clear here. As we're pushing away from the overnight high, our risk reward is depreciating. Our risk reward as we push away from the overnight high is depreciating here. Ideally for the gap rules framework to be mostly in play with decent and sound risk management principles, we open as close as possible to the overnight high. They're still on the table. Don't get me wrong. This is still roughly maybe a 2-to-1 type trade. It's not like we just write off gap rules as being irrelevant now, but this is primarily, not as ideal as opening up here as we once were. So about 5 points have been shaved off the risk-reward parameters. All right, ES has been covered. It's 9:08 on the clock. Let's speed things up. NQ, 4-hour time frame chart. Obviously, we're gapping here as well. Let's go to the high time frames, and we will continue on down through them. So 4-hour time frame chart in the NQ. Very clear. We've talked about the relative strength here. We're hanging out at the equal highs already to what was taking place in the highs of January. We've talked about the psychology of the fake break underneath these lows here. Sweep the lows and then a big rally in the upward direction. So trapped a bunch of shorts. No follow through on the short side. Look below and fail in the short term on like a micro range here. We're already through the upper target, which of course is the top of the range there. So it's kind of all about in the NQ, how do we resolve this range, right? Ideally at this point in time, any pullbacks are met with higher lows above the top of the range, above this zone just shy of 13K. That also, of course, represents a gap fill and a little bit extra on today's session. Let's move on down to an hourly time frame chart and of course see what's going on from this more nuanced perspective. Obviously, uptrend is starting to bud here. You can see, look at this. I love this right here, right? So opening kind of flurry of range, if you will, break into the afternoon. The pre-market session has held that in the overnight, right? So this, what was once resistance, is now acting as support. Whenever you see these bullish flips take place, it's exactly that. It's more bullish than bearish. Obviously, we're running into the upper wick from the FOMC spike back here. Another reason to potentially believe that you would want to be on the side of the gap fade instead of just a gap and go on today's session, right? Yesterday was a gap and go in the NQ. Now that we're running into the top of the range, we're running into stronger resistance here. I would say that it's very reasonable that the fade could be more likely because of the structure off to our left, right? We don't necessarily have this in the ES. We're running into stronger resistance in the NQ than we are in the ES, so the fade may be more applicable in the NQ. Let's move to the 15 very briefly. All of these sort of questions are very similar to the ES, right? We're opening on a true gap up. We're outside the prior day's range. We're towards the overnight highs, but we're slightly removed as we get closer to the opening bell. The overnight inventory is still roughly 90% net long, especially as we evaluate the volume taking place here. The pullback, again, does not set up the best risk reward here, especially in the NASDAQ. So your risk reward on the gap fade looks something like this, but the framework is the exact same. Needs to fail the overnight high at 13,069. 13,069 fails, looking through the opening print to close the gap under the open, wherever that may be, currently around 13,045. Closing the gap is the prior high of day at, what is that, 12,999, 12,999, let's call it 13K. Let's just round up there. 13K is the gap close. It's the psychological area. Because there's not as sizable of a gap here in the NQ, remember that typically the equivalent of a 20-plus point gap in the ES is a 100 point plus gap up in the NQ, and we obviously don't have that. We're gapping from 13 up to 13,045. It's about half. This is almost the equivalent of only a 10 point gap in the ES. It's not one-to-one, but you get the idea, right? It's roughly the same implication as about half the size of the gap in the ES. So we are not as mindful of the 50% gap fill reversal in the NQ, right? We're looking for the full kit and caboodle on today's session NQ down to 13K if the fade is in play in the first place. If we do move into the prior day's range, it's not the end of the world. Technically, this is an end of day spike. You want to remain above the value area above 12,934. 12,934 could produce higher lows. That definitely keeps us bullish off the top of the range. Recall that this gray bar represents the top of the 1 hour range. As long as we find support above the value area high, above the top of the hourly and 4 hour range, I would say bulls are still very much so in control of the NQ. That's the NASDAQ 100. Let's take a look at our /RTY. Oops, not RET. That's way off. RTY. There we go. This, of course, is the Russell 2000, our small caps. What I want to point out about small caps is that the 4 hour bear flag is still very much in play, and we're at the top of the range. So if the bears are going to make something happen here, it's got to be a sharp rejection on today's session to keep us in the flag range. If we start to poke above this 1800, if we start to poke above 1800, I think you're going to get the squeeze of all squeezes as you've got trapped shorts here. Anybody who is positioning for a bear flag is like, okay, this is off the table. You probably have stops that are stacked up here, up here, up here, right? So I think the squeeze is going to be otherworldly if this does take place in the upward direction. Now, again, we're gapping up into a known area of resistance at the top of the range. Is today the day that we're just expecting blind follow through on a short squeeze? Not really. I think what would be much more constructive is if we go to an hourly time frame chart, you can see here that this is the sideways range, nothing new here. There's the balance, right? What we ideally want to see happen, remember that there was no gap and go yesterday in the IWM. Or I suppose there was, some go towards the end of the day, but we got the full gap fill and some. So the structure underneath us is sound, aka if we just pull back to close today's gap, find a higher low, it's very difficult to not argue that this isn't in a bullish hourly uptrend, putting pressure into this high, that's when we look for this to break. So on today's session with the gap into this area of resistance, not convinced that we need to just squeeze today. It would be totally reasonable for a gap fill reversal, and then maybe tomorrow or even early next week sets up the move over 1800. All right, so that's what I would say about the Russell. Obviously, on a 15-minute time frame, all of the thoughts here are very similar. There's the prior day's range. We're gapping well outside of the prior day's range. We're towards the highs of the overnight range. And of course, overnight inventory is skewed 90% net long. Gap rule is in play here. Once again, looking for some rejection up here around the 1800 number to move through the opening print to close the gap, and then looking for the reversal here. 1786 is the number, 1786 on the downside for your gap fill reversal area. That's what we've got for you in the Russell. If it does just continue in the upward direction, next major overhead target is 1820. 1820 in the Russell. 20-point update in the Russell, very, very sizable. Very, very sizable. That's not nothing if this gaps and sees continuation for 20 points in the upward direction. All right? So I'm not really expecting that. until we get like a confirmation squeeze. What would be an indication that yes, we can see a gap and go and continuation? Well, that would look like a break and a hold above and then a move like this, right? I would not just want to blindly long this in here. I would not be a buyer on the break of the overnight high. Instead, I would look for the first reasonable pullback or consolidation above the overnight high, because as we know from the gap rules framework, we explicitly say that we need to be underneath the overnight high if we're expecting some sort of fade. Well, if we're not underneath the overnight high, then guess what's off the table? Shorts. Shorts are off the table if we're above the overnight high, and if we get that consolidation into a flag and break it, then fine. We'll go with gaps that don't fill. We'll go with gaps that don't fill. Okay? That's the Russell. We've spent a lot of time on our futures, and we need to go on over to the index ETFs here and run through them very briefly from a cash levels perspective, and then the core list of companies. What else is going on here? Yes, thank you, Crypto Commando, for one-upping or telling the chat how this operates, right? So if you're new to the stream, number one, thank you for tuning in. Appreciate you being here. What we do is we run through the futures levels because that always has more pre-market trading volume to analyze. After that, we go directly through the core list of companies in chronological order, starting on the SPY, Qs, IWM, Apple, so on and so forth through the list. So that's what we're going to do right now. We've got about 3 minutes to do it before 9:20, so let's start the speed run. SPY, gapping up. Same psychology as what we just described in the ES. We're not going to rehash the gap rules framework. The levels that you're going to want to watch: overnight high, 404.18, moving underneath the opening print, sets up the fade for the prior day's high. In here, roughly looking at 401 as a zone on the downside. The half gap area to pay attention to is slightly different than the ES, right? The ES, we were watching structure from this breakout point. In the SPY, it's 403. 403. It's not quite a full half gap. Obviously, if you're looking at the full range from here to here on the open, it's more like the upper third. So I would watch that structure. If you want the true half gap number, I'll give it to you right now. Coming in for the prior day's high to the anticipated open, we're looking at roughly, 402.75. So about 25 cents shy of the structure we just talked about, 403. I would really watch 403, to be quite honest with you. Look at the SPY. Look at what's taking place here. Pressure cooker top pre-market, break, retest, holding thus far with a rotation back higher. So 403 does strike me as being the more important partial gap close area. All right. Other than that, 401 reversal afterwards. Next up, QQQ. QQQ, we just talked about the NQ structure and how we are gapping into the high of the FOMC wick from in here. 315 roughly. Let's just draw that wick in so we're aware of it. We're literally just tagged it in the pre-market here. Again, the gap is not as sizable relative to the S&Ps. So looking for a full gap close here to your prior high of day. That number is 313.35. 313.35 on the downside gap fill reversal. And then anything that pokes into the prior day's range, it's not the end of the world. It is not the end of the world for the QQQ if we need to come back down and revisit 311.75, which of course represents value area high from the prior day's session. Something that does this is easily still producing a higher low on the hourly time frame chart, smaller time frame charts. Daily chart just continues to look phenomenal with this gap holding. Next up, IWM Russell 2000 and the small caps. What's going on here? Let's get rid of these fibs. This is from last night's video. What's going on? We just described this in the Russell futures, right? In the IWM, we are actually gapping up and over 176.75. We're opening right on it. I suppose I shouldn't say firmly over it just yet, but we're towards the top of this range. The structural cash level is 176.75. So as long as we open here and maybe put in a high before pulling back to close the gap, I'm extremely thrilled about the outcomes here in the IWM, because what is this telling us? Right, we're sort of producing equal highs up here. We're no longer really threatening from here to here to here as a bigger lower high. Don't get me wrong, equal highs don't bring us out of the woods, as we just discussed, but it's certainly a step in the right direction for the bulls. If we break down underneath, again, gap rules framework in play, breaking down underneath the open, prior high of day becomes the target at 175.50. 175.50 is the downside number in your IWM, looking for a reversal off your prior high of day. Very, very simple structural stuff when we have a gap in play here. Let's take a look through the core list of companies with 9:19 and 50 seconds on the clock. We're going to speed run it. What's going on with Apple? Getting a bit of a boost here in the morning. Gap up. Once again, gap rules framework is in play. We had a gap and go on the prior day's session. We know that we're outside of this range from in here. We're bullish on Apple and we're looking for continuation, but again, with the gap, you might just get blunted, if you will, at 162.75. You might see a stuff in Apple at that level. So is it, Is it extended? No. On the daily chart, we're still inside these inside bar ranges. We're gapping or trying to gap out of them on today's open. I would be mindful that 162.75 should just be a target and then reevaluate when and if we get here if you're going to see a pullback, right? So gap rules could be in play. The gap is very small in Apple, right? So something that does this, very achievable on the open. Watching 161 key support. If we're above 161, no reason to be bearish. If we do fall into the prior day's range, there might be some sort of short to get down to 160.50, about 50 cents of downside available here, but I would not overstay my welcome on the short side after everything that's taken place on the daily, especially with this lower wick in here as well. All right, talked about that in last night's video. If you want expanded thoughts, you can rewatch that. Netflix, just an absolute monster, gapping over the top of this range in here. Bull flag breakout on the daily. Can't really chase this in the upward direction. I just don't think it's worth the risk reward here. Obviously, the risk is that you pull back to close the gap. The reward is that you run into 370 or 340, 325. That's inverted risk reward from a probabilities perspective in terms of where you're at in relationship to support and resistance. So I think the more mindful trader is going to watch for some fade here. And, ideally we just catch some sort of higher low turnaround at a partial gap fill or the full gap fill reversal off of 332.50. So Netflix is going to be a patience trade on the open. If you're quick draw McGraw, you can look for a fade here. Gap rules do apply to any individual company as well. Next up, we've got Tesla. What's going on over here? Gapping. I really love this setup. This will be a primary watch again for me today. Yesterday, I thought it was going to be the day that went to 200. Did not. Today, could it be the day? Well, we've got another hammer candle on our daily screen. Take a look over that hammer high, which we're opening right at the prior high. If we can clear that, I think 200's back on the table as a reasonable upside target. If we fall back down into the prior day's range, number one, you want to see key support hold at 193.50, the neckline of this double bottom reversal that's trying to be underway. If we fall further than that, I would chalk it up to choppy in here, and I would not want to be active as a short. Next up, Google. What's going on with Google? Wacky upper wick there on, this is a fake print from Thinkorswim, but regardless, it's not really experiencing the gap like everything else. It's opening sideways in this range, so it's a patience play. It's longs over 102.50, shorts if we fail 100 with a lower high underneath. We'll keep it simple there. Meta, same idea. As in patience play in Meta. This strong reversal, I don't know, you guys can let me know in the comments, or the chat rather, is some news coming out about TikTok, or something must be happening with Meta and the fantasy land here. But regardless, 207 breaks are what I'm being patient for. I would love to see that take place for a stronger upside move. We know we have 221 as an upside target, and so far, obviously, we're not close to that breakout point. NVIDIA. What's going on with NVIDIA? AI madness continues. AI this, AI that. All you've got to do is say it, and we're moving higher. So not quite breaking out over 274.25. Once again, I think that this continues to be the MO. It's just caution in NVIDIA. Very, very difficult to be a new money long up here, regardless of what the headlines say and what the stock chart itself is saying. I think you want to be mindful of your gap rules to close the gap and potentially reevaluate for a move inside of the prior day's range to start to neutralize and just chop around up here, start to build out a distribution, and then maybe over time we see a breakdown of that range. That's something I could start to see happening now that we're not getting these solid green-bodied bars. This has been a phenomenon that we've been discussing, right? This starts to feel much more like a distribution instead of accumulation as a bull flag for a break, right? This sideways with choppy bar, whatever, back and forth, whatever, starts to feel like distribution for a sell. Next up, Microsoft. What's going on with Softy? Hopefully we can do this in the next minute here and get out of here for 925. Daily bull flag is breaking in the upward direction in the pre-market. We are gapping through a gap, so just be mindful that you have ultra thin structure underneath us here. It's just something to be mindful of. I would say any higher low pullbacks definitely viable on the breakout of Microsoft as long as we're above like 280. I would just use 282. 282 daily level right up around in here, 282. As long as we're above that, it's game on for longs. Higher low pullbacks should be scouted, gap fill reversal, all that good stuff. You know the deal. Not really looking for shorts in Microsoft unless we get price rejection back into, like, here's what you would need on the daily chart. You need a fake break and a lower high underneath. This could happen on a smaller intraday time frame, but I'm illustrating the point that you need a lower high underneath the top of the range to get back on the bear side in Softy. And then Amazon, last but not least, the mini beast, big gap out of the range here as well, trying to break the top. If this is going to play catch up, look left. There is thin structure through this area over here. Amazon could run here. Amazon could run based on this consolidation being the longest consolidation that we have on any tech chart right now. it looks good. Like, I've got to say, the structure looks good here. We have building blocks in the upward direction. We're threatening the top of the range. Once again, you just need to be mindful that gap rules are technically in play. What should happen is the inventory should correct, and if we find a higher low, that's where we get more constructive for the follow-through move. If we do just see straight up continuation, very difficult to actually trade that on the open. You need a higher low above some sort of upward trending VWAP. You need a higher low above, this structure here. You need consolidation above this structure, 101.5, right? That's what you would need in Amazon. All right, we've pushed our luck. We've got 4 minutes to go until the bell. Meta considering Europe political ad bans and tools to separate ads from harmful content. Or it could be Jim Cramer's favorite stock from Karen. Appreciate the humor. Always appreciate that, the humor. Very good, very good. Hopefully everybody learned something in this morning's stream. I thought it was an insightful one, as I typically do. Maybe that's a little bit biased because I run the streams, but hey, who knows? If you're not in the Discord, join the Discord. It's completely free and linked down below. You can click on the link in the description of the chat box here, and that'll bring you over to the chat as well. There's no gotcha. There's no catch-22. There's no credit card. There's nothing. It's just a redirect link. So you can join us there and hear my updated thoughts on the market as it's unfolding. With that said, everybody, thank you for tuning in. Appreciate you being here. Have a green trading day. And I will see you in the next one. Remember, we're live at 8:15 tomorrow morning. 8:15 for the PCE inflation numbers. 8:15. Be there. And I will see you on tomorrow's session.